Hello and welcome. This is Roy. I have some very interesting charts in this video, and here's the list of charts. I have the dollar index, the US dollar, Czech koruna, the euro US dollar, Canadian dollar, the euro, Japanese yen, British pound, Japanese yen, US dollar, Japanese yen, Australian dollar, US dollar, gold, silver, TYX, TLT, US T-bond, the euro bookseller, long yields, light crude, gasoline, the Dow Transportation Average, the Dow, the S&P 500, the DAX of Germany, the EU Stocks 50, and I'll terminate the video with a look at the Chinese Securities Index. In fact, this time I'm actually going to start with the last chart, which is the Chinese Securities Index. And before I even approach this chart, I'm going to show you something that I came across yesterday, which really made me freeze in my seat. Yes, and I want to see how you are going to react now. Here it is. This is taken from a website called Business Insider. And the article that you see is very relevant. It was written on December 26th, and the title is as follows: Credit in China has grown from 9 trillion to 24 trillion since 2008. Now, it's a long article. I won't read the whole thing. If you are following a bit the news of what's going on in China, you know that they have a credit boom completely out of control now for several years. You just need to see the figures here. And the authorities have been trying to calm down the situation. They've been trying to moderate the growth of credit, and they have been unsuccessful. Now, I'm going to go through the whole thing, and I will keep a link of that. You probably have seen the link that I sent you for this, so you can read it at your own time. But what I want to focus on is this. The pace of credit growth eclipses excesses seen in Japan before its property bubble burst in 1990, or in Korea before its crisis in 1998, or in the US before the subprime bubble burst in 2007. Now, if you have been following just a bit the recent events in the last 10 years or so, 10, 15 years, just see what this means. I mean, which class of events the current development in China is to be taken with. These are horrendous movements in the markets. And when you continue to read here, and I want to do that because I really think it's going to give us a very good perspective to what I'm going to say about the chart. The sheer scale of outstanding loans, now $24 trillion, as much as the US and Japanese banking systems combined, leave the financial system highly vulnerable to higher borrowing costs. Now just spend 1 second thinking about what we read here. This means that China, who got only is only the second largest economy in the world, has debt which is more than what you can find in the US and Japan together. Okay, just by comparing it, you can already see that the situation in China is completely out of control. It's already very, very bad in Japan. It is very bad in the US. There is debt all over the place. But in China, when you consider that they are number 2 in the world, and they are basically they basically present here a debt that is engulfing what's happening in the economy of number 1 and number 3. Okay, I continue here quickly. The central bank faces a delicate task trying to wean the economy off such extreme levels of credit, and may have left it too late to avert a stormy landing. The US crisis in 1929 and the Japanese crisis after 1990 were both triggered by central bank tightening intended to halt speculation. Harder to achieve in practice than in theory. However, any crisis in China would be sui generis since the core of the Chinese banking system is state-owned. I don't agree with this at all, because the collapse of the Chinese economy would mean that they will cut very, very sharply on imports, and that's going to crush completely the countries that are dependent heavily on Chinese imports. Just think about Australia, think about Brazil, think about so many other countries that are absolutely linked to China for its imports. They live on the Chinese, on exporting to China. Okay, so I'll just finish this quickly. There is little to be gained from pushing China's debt ratios any higher at this point. The economic return on each extra yuan of credit has fallen from 0.85 as recently as 2007 to barely 0.2 today, a classic sign of credit exhaustion. This is a frightening conclusion of what you see here. So I think that now that I've gone through this article, and as I said, you can dwell on it. As I provide you the link, you can read and see what you make out of it. And let's have a look at the chart. This is the chart of the Chinese, the Shanghai, yes, the Chinese Securities Index, and that's the height of 2007. And since around here, we have seen the Chinese debt just piling, growing in monstrous speed to monstrous dimensions. And just see what's happening here on the weekly MACD and why there is reason to be pessimistic as I see things right now. Just look, this is the MACD on the weekly, and you can see that it went back up here. It is knocking against the line that was created by the MACD itself, and it's turning down. It is not able, look, it's turning down. It's hitting the line that comes up here, and it's turning down. And we are looking at the chart, and the chart is, I had interpretation for it. Nothing is written in stone here because we are still waiting for confirmation, but as you can see, the elements, the bearish elements, are definitely dominant here. This is an A. We treated this as an A, B, C, D, E, potential B ending here. We're not terribly sure. We think this is the case, and the market is beginning to look down. In fact, it is breaking down. That's the end of the triangle, if I'm right. That is one. That is two. Broke down under support. We needed to continue breaking through the floor here to start gathering serious momentum to take it eventually to much lower lows. I think that it is going to do that. I think it's going to do that, and I think that the situation in China is really bad. It is difficult to assess the situation in the US. The Fed has been getting it wrong for a long time, for decades. They have been getting it wrong on turning points, on assessment of the economy. So who am I sitting here telling you that I can assess what's going on in China? But I'm just looking at the debt situation, and what I'm seeing, what I read recently about ghost towns in China, and you just have to read how they calculate the GDP. They don't calculate it on the basis of sales, meaning on the basis of real usage. They calculate it on the basis of production, which is a communist twist of looking at the economy. Whatever you produce, that is the size of the economy. So since it is a command economy, it's sorry, it's not very convincing. If you have, I read about a city that was built for 1.5 million. The city is complete. They have stadiums, they have opera house, they have gigantic boulevard. They have you've got to imagine to yourself, this is a city brand new. Everything is new and everything is empty. There are 20,000 people living in this city, which was built in the middle of nowhere in China. And the reporter that was writing about it says he was sitting there with the mayor on a lavish lunch. They were sitting discussing what's going on, and he was told that citizens are on the way. Yes, they just had 20,000, but the other 1.5 million almost are on the way. They're coming. But so far, the town is completely empty. And in short, I think the situation there is really looking very worrying. And I think that the Chinese market going into a serious nosedive is only going to exacerbate the slowdown that now is taking place in Asia. And the rise in the US dollar that I see coming in the next few months and years is likely to exacerbate, make it even more difficult. That is what I have to say currently for China. And I'll follow the usual